let's respond to the polls. Okay, let's respond to the polls. That's the only way you could reward me. Okay, that's the only way you could reward me for every session is by responding to my polls and interacting with me on the webinars. Okay, so in the absence of no question, let's dive right into what we have today. Trading basics, everyone should know. Okay, trading basics, everyone should know. Now you'll be wondering, how did we know that USD CHF was going to go up 125 points before it happened? It's because of we understood a few basics of how the markets work. Now, that type of basic is a more advanced basic, but this webinar would give you a proper insight into the little things you need to know about trading the financial markets and getting started. We'll talk about terminologies also and how the market really is. Okay, so in this session we'll be going through trading the financial markets. We'll talk about hedging and speculation. We'll talk about how trading works. Okay, how trading works, how trading the financial markets works. We'll talk about a few trading terminologies and we would conclude on everything we talked about. So let's dive right into it. Financial markets and overview. Okay, the financial markets is broadly referred to as any marketplace where the trading of financial securities and assets occurs. Now, you'll be wondering, when I said financial markets, I did not say any marketplace where trading securities and assets occurs. I said financial securities and assets occur. In the financial market, all we deal with is money, finance, money, something that relates to money, basically finance. That is what we deal with in the financial markets, and it is a marketplace. It can be online or physical. Online, such as the way you're trading on your mobile phone with Eagle Global Markets, such as the way you trade on your mobile phone, trading cryptocurrencies and all. You can buy stocks on your phone also, and it can be physical also when you go to a stock exchange to buy stocks. That is basically what the financial market is. It's a marketplace where you can transact financial securities and assets. You buy and sell financial securities and assets, trade financial securities and assets. That is what the financial markets is about. Now, it is only true continuous and non-stop trading market in the world. This is the only market that runs every single day, every single now and then. It doesn't stop because everybody is buying money. Everybody is doing something for money. That means it's either you are exchanging on your phone or in real time. Okay, so the market is always open 24/7 for you to transact in, and this is the amazing part. It's not like Oyibo market, it's not like Agege market, it's not like Marina market. Okay, this is a market that is open 24/7. Even in the midnight it is opened, where you can easily transact financial securities and assets. It's non-stop. It occurs, it continues. The market doesn't close. The market doesn't sleep. You are the one that sleeps. Okay, you sleep because of you need to rest, but the market doesn't sleep and doesn't rest, because everybody wants to make money and you should be willing to make money also. Now, when I say financial securities and assets, it basically includes stock market, bond market, forex market, derivatives market, and amongst many other. We have the cryptocurrency market, we have the equities market. It's very, very large. That is why the market never sleeps, because somebody somewhere is trading one certain type of market at a certain period of time. Somebody somewhere is trading another type of market at a certain period of time. That is why the market never sleeps. The stock market, the bond market, the forex market, the derivative markets, the equities market, the cryptocurrency markets all fall under the financial markets in general. And in the past, the forex market was dominated by institutional firms and large banks, which acted on behalf of clients. Now, let me tell you a quick story. In the past, you and I, as a trader, we can't trade the financial markets. You know, we are traders now. We can trade the financial market from our mobile phone or anything. But in the past, you can't trade the global financial markets if you don't have a certain amount of money in your bank account, if you are not of certain level in the society. That was before. Only your bank can do it for you. Then they give you peanuts for it. They give you peanuts in return as your ROI. Do you know how amazing it is to deposit 100,000 naira in the financial markets? Deposit 100,000 naira in the financial market starting of September, and by the end of the month, be able to withdraw 20 to 30% of your profits, which you made off your 100,000 naira. The bank will not give you that same ROI at the end of the year. This is why the financial market is your go-to plan to become wealthy. It's the only way you can make wealth stress-free. It is the only way you can amass wealth stress-free. Trading the financial market doesn't come with stress. People only make it stressful. You only make it stressful. If you can trade 3 times a week and make 20K, it is enough. It's a $6.6 trillion market. You should be able to take your own drop, scoop your own part away every single week you trade in the financial markets. And like I said before, in the past, you can't trade the global financial markets, but now the internet has made it easy. You can trade the global financial market. You don't need to go through your bank or an institutional firm. You just need to sign up to a broker. A broker is not even your bank, and we process your order directly. Eagle Global Markets process your order directly to the big banks, and you execute your trade and start making money. But however, in recent years, like I said, it has become more retail-oriented due to the internet. Traders and investors of different sizes have gained entry into the financial markets. Now, you can start trading the global financial market 1,000 naira, 5,000 naira, 10,000 naira, 50,000 naira, 100,000 naira, a million, 10 million, a billion. You can start trading financial markets with any amount you have. And this is why I tell somebody on this session, I don't know if it is you, just somebody on this session, just start. It's not about coming to my webinars. Just start trading the global financial markets, because there's money. There's a lot to be made. There's money to be made. A lot to be made from trading global financial markets. Now, trading, not investing. You might be wondering, is trading the same as investing? And all. Now, truth is, trading is not the same as investing. Much like in every industry, there are a number of basics when it comes to the financial market that every trader or aspiring trader must understand in order to quickly become profitable. You must understand this basic to quickly become profitable. In quotes, quickly become profitable. Now, keep in mind, trading is not a get-rich-quick scheme. But if you do it the right way, you can get rich quick off it. Are we all following? Yes or no? Are we all following? Am I making sense? Are we all following? Am I making sense to you? Trading is not a get-rich-quick scheme. But once you understand the basics, a few things that are attached to trading, you can get rich quick off it. The most important of this is the difference, two approaches of wealth creation or profit generation in the financial market, trading and investing. Once you are able to understand the two of them and see that they are not the same, you are a stepping stone ahead. You've just made that first cornerstone. You've laid the foundation already to become profitable. In general, now let me tell you something. In general, just quickly breaking down trading and investing. In general, investors seek large return over an extended period of time through buying and holding financial assets or financial securities. Okay, as an investor or investors, what they do is they buy a certain financial instrument and they expect it to go up. The only way they can make profit is if it goes up, if it continues going up from where they buy. That is the only way investors make money, and they hold it for longer period of time or a large period of time. They buy large, okay, they buy large, they expect a large return, okay, and they hold it for a longer period of time. Now we are laymen, okay, all of us on this session, we are laymen, okay. We want to make money to be able to cater for our needs. We want to make money to be able to attend to important things, okay. We want to make money to be able to attend to important things. That is why we are traders. We are not investors, okay. We will take advantage. Traders take advantage of both the up and down. We will make money if it's going up. We make money if it's going down, okay. We enter and exit positions strategically over a shorter time frame, taking small profits or even large profits and more frequent profits. As a trader, you want to capitalize on the ups and downs. Now, I'm not telling you to start trading high frequency, no, but there's a way you trade they will be able to capitalize on the up and down in the financial markets. You'll be able to enter and exit position, make mad profits or lesser losses. Okay, you'll be able to make profits and take lesser losses. Because the whole idea of trading the financial market is to be profitable. And to be profitable, it's all about making more profits and keeping your losses less. That is the major idea of trading the financial market. So it's not about you making profits every day. See, you make profits every day, fine, but losses will come. Don't let those losses sidetrack you. Okay, your attention is to focus on the goal, which is to make profits, make more frequent profits, and keep your losses minimal. Like I said, the forex market, to be precise, it's $6.6 trillion market. All you need to do is be able to scoop your part every week. Scoop it every week. You see, don't lose your capital. Always keep in mind, don't lose your capital. You see, your capital is key. That's the only way you can make more money. Focus on making $1 every day, 500 naira or 450 every day. It adds up. Then if you can do it consistently, you can do $20 daily. You can do 20,000 naira daily. Make 20,000 naira profits daily. This is how easy the financial market gets. And other differences when it comes to trading and investing includes capital, profits, margin, and risks. Okay, those are the differences that come with trading and investing. Now, as a trader, you need to find your style. This is where we are. This is where the work is. Don't say because of the mentor at EGM is a swing trader and a day trader, you want to be a swing trader and a day trader. We all have different characteristics as a person. Okay, a trader style refers to the time frame or holding period in which you hold on to a certain financial instrument, be it stocks, commodities, or any other trading instruments. Okay, it depends on how long you capitalize on it, whether you buy or sell. And they generally fall into this category. Position trader, they hold trade for months to years. Swing trader, they hold trades from days to weeks. Day trader, they hold positions or trades throughout the day only. During the day only. We don't try to incur overnight positions because of swap fees. Then scalpers, we all trade for seconds to minutes, and we don't hold trades all through the day or overnight. Now, once you are able to understand the type of person you are, what type of characteristics you are, are you conservative? Are you conserved, or are you aggressive when it comes to making trading decisions? If you're aggressive when it comes to making trading decisions, you can decide to be a scalper. If you are conservative, you can decide to be a day trader. If you are very, very conserved, you can decide to be a swing trader. If your conservation level, if your conservation level is 1000%, you can decide to be a position trader. And all these trading methods comes with a certain capital attached to them. Position traders used to have large capital. Swing traders, day traders used to have medium capital. Scalpers can have very small capital because they want to make profits in and out every time, in and out. So they have a higher chance of using the small capital to make a lot. That's just the major thing. That's the way it comes to finding your style as a trader in the financial markets. Now, let's talk about hedging and speculation. Now, apart from the purpose of making profits in the financial market, people trade for these two major reasons. Now, hedging. The best way to understand hedging is to think of it as a form of insurance. Now, think of it as a form of insurance. How? Imagine you are buying a Toyota Corolla LE and you are buying a Toyota Corolla SE. You just keep that imagination in your mind. Now, why would you be doing so? Possibly someone told you that the gearbox for a LE is not always good, that the gearbox for a SE is always better. That's why but you like an LE more than an SE. So you're just buying that SE to save you any cost. Anytime the LE has faults or issues, you just start using the SE. That is how an insurance is. That's how you're saving yourself from a lot of problems. That's the same way hedging is. Hedging is trading. Or hedging when you're trading is basically when you open a position that goes against a current open position. Let's say you are buying gold and gold is going down. You now open a sell on gold. What you just did there was hedge. You protected yourself from the losses that will come with the buy using the profits that comes from the sell that you opened. Do we understand? Do we understand what I just said? You protected yourself from the losses that will be incurred from buying gold through the losses that will be in through the profits that will be incurred from selling gold. It's basically you are protecting yourself from any time the gearbox of the LE has an issue by driving the SE. Do you understand now? Am I making sense? Yes or no? I'd like to get a lot of response. I'd like to get a lot of response to know we are all learning. Okay. Do you understand the concept of hedging now? Gold is going down. You now bought, but it continued going down. You now sold. You are protecting yourself from the losses that are incurred from the buy by basically opening a sell position. The profits that comes with the sell will take care of the losses that comes with the buy. Do we understand? Let me use a life example. Okay, let me use a life example. We all like crackers, right? We all like cookies. Okay, let's just use that. We all like cookies, right? We all like cookies. And someone told you that you should stop eating a certain type of cookie, but that's the type of cookie that you like. And they now advise you on a new type of cookie that you should buy. So you bought the two cookies, and when you tasted the one he advised you, you didn't like it. Then you start eating the one you liked. That was basically ensuring yourself of what if I don't like this new one? I bought the old one to save myself the stress of going back to the store to buy it. What you just did here was, this one is not sweet. Let me eat the other one that is sweet. You protected yourself from the bitterness of this one by using the sweetness of that one to cover for it. Do we get it? Is it more clear now? Trying to break it down to the most simple form. Do we all understand now? I'd like to get a response. I'd like to get a response. Do we all understand now? Okay, great. Now, to the guys that said they don't have a trading account with Eagle Global Markets, okay, all you need to do is just click on the link I attached below, okay, access.eagleglobalmarkets.com, okay, access.egmarkets.com or Eagle Global Market. Best preferred, you just click on the link I sent to you, okay. Click on it and you get access to open a trading account with us for free. We don't charge you for it. We don't charge you for paying for education. Most brokers out there will charge you or tell you need to have a certain amount so before you attend the education. No, our education is free. Our education is free. Our education is always free. Now, speculative trading. Speculative trading refers to the act of conducting a financial transaction that has a substantial risk of losing value, but also holds the expectation of a significant gain or other major value. With speculation, the risk of loss is more than offset by the possibility of a substantial gain or other recompense. Now, what it basically means is trading. Okay, the way we trade, the way you and I trade, we are trading to make profits basically, and we understand that for us to make profits, risk comes with it. Risk of losing capital that we put in comes with it. This is what speculative trading is all about. Speculation. Okay, speculative trading is basically we are taking that risk to make money. We are putting our money where our mouth is to be able to make a certain amount of profits. Understanding that we can lose that capital that we put in. That is what speculative trading is all about. Now, speculative trading is when you now decide that no, it is the LE that you like, it is the LE you will buy. You now bought only the LE. Okay, you now bought only that you are driving the LE. When you understand the risks that comes with the gearbox not working one morning. Speculative trading is when you buy that cookie you were advised to buy. When you understand the risks that you could lose money on the cookie if it is not sweet, you will not eat it again. You just throw it somewhere. Do we understand what speculative trading or speculation is now? Do we understand what it means now? Do we understand what it means now? I'd like to get a lot of response, though. I'd like to get a lot of response. Okay, great. Now, let's move on to the next slide. Getting started trading. Getting started trading the global financial markets. Okay? Getting started trading the global financial markets. Now, you see, education started first. See, it's very, very important you get enlightened. Very, very important you get enlightened about what you want to venture into. While it is not complicated, trading is a project of its own and requires specialized knowledge. It requires you staying focused and understanding these things. Trading requires you to do all of these things. Trading requires this from you: staying focused and learning how to trade the right way. Trading requires this from you. Trading requires it from you. For instance, the leverage ratio for trade is higher than equities, and the drivers of financial instrument prices are different from one another. That is why at Eagle Global Markets we offer you the best financial markets education. What it basically means is, for you to trade global financial markets, be it big or small capital, we offer you leverage, okay? We offer you, or we borrow you more money to be able to trade. The concept of leverage I've explained before in previous webinars. You can go over and watch what I mean by leverage. And there are drivers of financial instruments, prices of financial instruments. Prices of financial instruments, okay? There are things that move the financial instruments, such as news reports, like NFP. We had NFP on last week Friday. We had NFP last week Friday, okay? NFP last week Friday is a driver of price. You can see the way EUR/USD flew up about 50 points. That was just, if you understand how to trade properly, you can catch that 50 points. I caught the 50 points. You can do the same also. You can catch it also every single day, every single time there is a financial report, you can catch it. That is why at Global Markets, we offer you the best financial markets education in the country, and also it is free. Now, Eric Bemi asked, every time I try hedging, my initial trade closes immediately, I open a fresh one in the opposite direction. Is there any reason why this is happening? Now, the reason this is happening is because of when you placed your first trade, the one that closed when you opened the new one, you did not turn on hedging, okay? If you are using the cloud trade platform, if you want to place a trade and you know there's a likelihood of you hedging, or don't even think there's a likelihood, there's always a likelihood that you hedge, okay? Always turn on hedging so you can be able to keep those positions, the old one and the new one that you want to run on, okay? So always turn on hedging when you want to trade. This doesn't apply to the MT4 traders. MT4, you guys, hedging is automatic on your own. You can decide to open, buy, and sell at the same time. It won't close anyone. Okay? Now, to the second thing. So, Eric Bemi, I hope I answered your question. Now, the second thing is setting up a broker account. You can attend our classes even without having a account with us. The link is always on our Instagram channel, or sorry, on our Instagram page. And after you've attended the classes, you can decide, yes, you like what we do. You like the way we explain the financial markets to you. How we dish out contents to you based on the financial markets. You can now decide to open a trading account with us. Okay, for beginner trader, it is good idea to start with a standard trading account with low capital requirements. All our accounts are standard accounts, tight spreads. We don't charge you commissions. Swap fees are close to nothing. Okay, and this will help you. We require little capital. You can start trading with as low as 1,000 naira. Okay. And this helps you become more comfortable trading and determining your trading style. Just with this, opening a trading account, starting with little capital, helps you to gain more confidence and get comfortable with trading. I know somebody might have a question in their mind right now saying that, I want to demo trade first. I want to do this first. Let me tell you the truth. See, demo trade is a distraction, or demo trading is a distraction. And it's a bitter truth, okay? It's a bitter truth. Imagine you are demo trading a $100,000 account or $50,000 account, but deep down you know that you are not going to start trading with that amount. Who are you deceiving, or who is deceiving who? You will already have that mindset of that $50,000 account. You have that mindset of the $50,000 account, you now bring it to your 10,000 naira account and you end up losing money. So the best way to learn the financial market is getting into real trading situations. Get into real trading situations. Yes, get into real trading situations. Get into real trading situations, because that is the only way. That is the only way you gain more experience about the financial markets. That is the only way you gain more experience about the financial markets. Getting into real trading conditions. Get into real trading. Start trading a live account. Once you've learned a few basics, just go see it happen. See how it happens. Understand it. Have the urge to understand more. That's the way you gain an edge over the markets. Now, just a quick one, just a quick nugget, okay? At EGM, we could get you started with a standard account immediately here, okay? Even better, like I said, we don't charge commissions as other brokers do. Every single broker out there charges you commission, but we don't charge commission because of it is good for traders. We shouldn't be charging you for using our product. It should be free for you, okay? It should be free for you. We don't charge you a dime for using our product. That's why we don't charge commissions, and it is great for traders compared to other brokers that do that. Instead, we just make money from spreads known as pips, the difference between the buying and the selling price. That's how we make our money. So you see, we are not in the business to make huge money off you. No, not at all. That's why we don't charge you commissions. The spreads are very, very tight. So you see, we make little or nothing from you at all. Okay. In copy trading, is it possible to log profits? Yes, it is possible to log profits when it comes to copy trading. Okay. Now, moving on to trading terminologies. I want to drop a poll right now, and please let's respond to it, okay? Let's respond to it. And to the person that said they don't have a trading account with us, click on the link I dropped in the chat box. Get an account with us and start trading global financial markets, okay? So I'm sending the poll out right now, and please let's respond to it. So the poll just goes, are we all following? Are we all following? Let me just know, are we all following? Just respond to the polls. Just click on yes, 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 or no, no, no if you're not following. Okay, are we all following? Let's respond to it. Okay, I want to drop the Telegram channel link in the chat box so we can all get gain access to join. Okay, we can all share the link outside so our families and friends to join. So I want to get the Telegram link. Just a minute. We'll hop back into what we're discussing. So I'm sending the Telegram link in right now. We have a lot of amazing conversations on Telegram group. We share trade ideas. If you're on Telegram group, just share your experience in the chat box, okay? Just share your experience in the chat box. If you're on Telegram group, share your experience in the chat box. It's amazing out there on the Telegram group. That's the link to join the Telegram group. Join us. Let's converse. Let's talk, okay? Great. So back to trading terminologies, okay? Back to trading terminologies. First is ask. Okay, an ask or an ask price is the lowest price at which you are willing to buy a financial instrument. An ask price is the lowest price you are willing to buy a financial instrument. Now, let me just bring a life example into this. Now, when you go to the market and someone tells you a bunch of bananas cost 200 naira, you will not want to buy 200 naira now, right? You say last price. What's the last price now? What's the last price? That's what you see. That's the same that's the way it's related to ask price. Okay, so it's just the most cheapest price you're willing to buy a financial instrument for. For example, if you place an ask price of $1.3891 for GBP, the figure mentioned above is just the lowest amount you are able to pay for a pound in US dollar. The ask price is generally greater than the bid price, basically. Now, a bid price is the price at which you are willing to sell a financial instrument. Let's say you have a store that you sell a certain good, okay? Let's say you sell furnitures. You always have this last price you are willing to sell your furniture for and never go below that price. That's what a bid price is, okay? the price you are willing to sell a certain possibly table or chair for. And a market maker, when I say a market maker, it just means price. Okay, price in the currency is given. Price in a given currency is responsible for continuously putting our bids in response to the buyer's queries. Okay, while they are generally lower than ask price in instance, the demand is great. Okay, demand is always great. That means people always want to buy. So you are always selling. You are always selling. People want to buy, so you are always selling. That's basically what it means. The bid price can be higher than ask price when demand is great. Once there are more buyers than sellers, okay, you will start selling your financial products out there. Money tricks. Now, bear market, bull market. A bear market is a type of market which price declines for all financial instruments. It means all financial assets are just going down. Okay. Or when they say Bitcoin is in a bear market, like last 3 months, Bitcoin was in a bear market. We fell from 60K to 40K region, or 38K to be precise. That was a bear market then. Okay. We fell more than 50% of the price of an initial Bitcoin. Okay. So that was a bear market right there. And bear market signifies a market downtrend and a result of depressing economy fundamentals or catastrophic events such as a financial crisis or a natural disaster. What caused the dump or the huge bear market on Bitcoin was because of China banned Bitcoin. Okay, China banned Bitcoin and everything just went down, all the way down. Why dollar is selling is because of the interest rates are poor. Okay, the interest rates are poor. That's why it's selling. Nobody's willing to invest in the dollar. That's why dollar is falling in the global financial markets, but it continues rising against the naira though. Now, the bull market. A bull market is a type of market in which prices of all financial instruments are just going high. They're going high. They're flying. Okay. The bull market signifies a market uptrend and are a result of optimistic news about global economy. So it's basically saying there's no more coronavirus in the United States. You see dollar starts going up because everybody wants to start investing now. No lockdown again. Everybody wants to buy the dollar. That then dollar continues going up. That's just what the bull market is. Now, leverage. Leverage is basically borrowed money. Okay, let's put it that way. Leveraging is a trading mechanism investors can use to increase their exposure to the markets by allowing them pay less than the full amount of the investment. Okay, that's basically so borrowed money. You don't use your money, you use somebody else's money. Just an added fund. Okay. The flip side to a high leverage environment is the downside risk are enhanced. Once you use too much leverage, or once you use all your leverage, you are open to losses. Okay, you are open to losses. You can incur a huge amount of loss. Okay, your losses will multiply if your trade goes the opposite direction. Now, high leverage means if you are given a leverage of 1 to 200, don't use all of the 200 at once. No, don't do such. Don't use all the 200 at once because you want to protect yourself from losses. Remember, more profits than losses. More profit than losses. So leverage is just borrowed money. You don't want to borrow more than you can pay back. Okay, that's just how it is. Lot sizes. Currencies are traded in standard lot sizes, or in standard size, to be precise, known as lots. And there are three common lot sizes. We have the standard, mini, and micro. Some used to say nano, but I don't really consider nano at all. It's just standard, mini, and micro. Because nano would not allow you earn anything substantial in the financial market. And we all want to earn something that is substantial in the financial markets. So we have the standard lot size, which consists of 1,000 units of the currency. We have the mini lot size, which consists of 10,000 units of the currency. And we have the micro lot size, which consists of 1,000 units of currency. It's basically 1, 0.1, and 0.01. MT4 guys, they would understand this. One standard lot, 0.10 mini lot, 0.01 micro lot. The bigger the lot size, the higher the profits. That's just the truth. And the bigger the lot size, the higher the losses if the market goes against your direction, and vice versa. Now, margin, okay? Margin is the money set aside in a trading account for a currency trade, okay? Margin money helps assure the broker that you will manage your risk, okay? and meet every monetary obligation, even if the trade do not go your way. So basically, it's just like a collateral. Okay? It's basically a collateral that you will not misbehave. Let's just use the word misbehave. You will not overtrade. You will do the right thing at the right time. You will trade properly. That's just margin. It's a money set aside. So it covers for the borrowed money that you have. The amount of margin depends on the trader and your balance over a period of time. Okay, the trader basically and the customer balance over a period of time. What your balance is relates to what your margin is. Margin is used in tandem with leverage, as we've talked about for trades in the forex market. A pip is basically called percentage in point or price interest in point. It is basically the minimum price move, which is equal to 4 decimal points made in the currency market. Now, let me tell you something. PIP is the cornerstone for everything within the financial market. It's going to be the cornerstone for you calculating your take profit, for you calculating your stop loss, for your take profit, for your stop loss. That's what PIP is about. It's the cornerstone for everything. It is the smallest, okay? It is the smallest change a financial instrument can have, be it in profit or in loss. 1 pip is equal to 0.001. Okay, 1 pip is equal to 0.001. 100 pips are equal to 1 cent. 10,000 pips are equal to $1. The pip value can change depending on the lot size you use. Understand such. The pip value can change depending on the lot size you use. Now, in a standard lot size, if you're using a standard lot size, 1 pip is going to be equal to $10. Okay, that's if you use one standard lot to trade. 1 pip is $10. If you use 1 mini lot to trade, 1 pip is 10 cents. If you use 1 micro lot to trade, 1 pip is 1 penny. Because currency market uses significant leverage for trade, and small price moves will define your pips and can have an outside effect on your trade if it goes the wrong way. Spread, sniping and hunting. So spread is different, is basically the difference between the bid and the ask price of a financial instrument of the currency pair. Forex traders, or forex brokers to be precise, we as a broker, we don't charge commissions. Okay, we don't charge commissions. We make our money through spread. So just the difference between your ask and your bid price, how much you're selling for, how much you're buying for, the difference there, will make money from it. The size of your spread is influenced by a lot of factors. Some financial news, some volatility in the market, some the way momentum is in the market. Some of them are just based on the size of your trade, demand for the currency, and its volatility, like I said. Sniping and hunting. Sniping and hunting is basically looking for trades so you can make profits. It's just basically analyzing. Okay, sniping and hunting is purchase and sales of currency near predetermined points to maximize profit. You looking for where to buy and sell to maximize profit. Brokers and traders indulge in this practice, and this is the only way to catch them is to have a network of traders and observe the pattern of such activity. Good morning. Now, conclusion. Now, based off everything we've discussed, there is a key difference between trading and investing. Please understand that. There's a huge difference, key difference between trading and investing. Understand your trading style as a trader. It is very, very important to you being profitable. You can either enter the market to hedge on ongoing losses or speculate a particular price movement in the market to make massive profits. It is important to know the terminologies related to forex trading or trading the global financial market as a whole before you begin the actual trading process. Very, very important. You only want to venture into what you understand. While there is a significant overlap among standard finance terms, such as leverage, bid and ask price, there are some terms such as pips, forex accounts, lot size that are unique to currency trades. There's a lot of words that are entwined in the financial markets, and they relate to a lot of different financial securities and financial assets. So you should be able to distinguish them. We've come to the end of today's webinar, and thank you for joining me. I'm open to taking questions right now.